the sanctions against Russia will match the level of aggression.
We will continue on a remorseless mission to squeeze Russia from the global economy.
We've cut off Russia's largest bank, cut it off from the U.S. financial system.
We are not going to harm the world economy system as long as we are a part of it.
Have yesterday's sanctions convinced Russia? We are hearing in our sky and seeing on our land that this is not enough.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Good morning, happy Friday, and welcome to Bloomberg Surveillance. This is the Early Edition. I'm Danny Berger in London, standing in for Francine Lacqua. Here's what's coming up on today's program. Russia's invasion of Ukraine intensifies. Moscow forces seize Chernobyl and close in on the capital, Kyiv. The U.S. and its allies ramp up sanctions, but Russian energy and SWIFT are exempt. Still, President Biden vows severe costs for Putin's actions. Zelensky says Ukrainian forces are fighting back, but he says that the West sanctions don't go far enough. First, let's get a check on markets as we digest the past 24 hours. It was a big rebound yesterday on Wall Street. We are seeing European stocks move higher, not as large of a rebound. We have the situation where the tail risk has now become the base case. So that geopolitical concern certainly still priced into European equities, despite the fact we're up by about 0.6%. The best performing sector today is basic resources, 1.4%. We have seen commodities across the board chart higher, allowing the sector really to outperform. That also means London outperforming today, given most are listed on the FTSE. Russia off its highs for the morning. At one point, it was up nearly 25%, up 14%. Still a remarkable turnaround, but nothing to undo yesterday's losses of over 30%. Hundreds of billions of dollars in market cap wiped out. Now, we also are looking at some of the natural gas gains coming back. And when I say some, I do mean a lot. 24% lower. We're still above 102 euro megawatt per hour. We're still seeing gas flow through from Russia to the rest of Europe. Sanctions perhaps not as harsh there. That's allowing a little bit of those really sky-high prices to come down. Wheat also coming down slightly, down 2% after some record gains yesterday. Brent crude, though, that is still moving higher by nearly 2%. We're over $100 a barrel. Is it an oil shock that these markets need to price in? And finally, the ruble gaining up 0.6% versus the dollar. Now, Joe Biden did impose tough new sanctions on Russia, and Western nations also warn that Ukraine's capital, Kyiv, could fall.
We've cut off Russia's largest bank, a bank that holds more than 1/3 of Russia's banking assets by itself. Cut it off from the U.S. financial system.
We will, of course, use Britain's position in every international forum to condemn the onslaught against Ukraine.
We took a political decision to add an additional package of mass sanctions, which will be painful for the Russian regime.
We will never tolerate any attempt to change the status quo by force. We will tighten our sanctions and stand in solidarity with the international communities.
There was certainly duplicity. A choice, a deliberate choice, was taken consciously by President Putin to launch a war.
We will continue on a remorseless mission to squeeze Russia from the global economy piece by piece, day by day, and week by week.
Now we have to meet the moment. We will hold the Kremlin accountable.
We are not going to harm the world economy system we are a part of as long as we are a part of it. I believe our partners have to understand it and not aim to push us out of the system.
Russia's invasion of Ukraine has been intensifying. Russian forces have seized the highly radioactive nuclear plant in Chernobyl, 80 miles north of the capital, Kyiv. In a speech this morning, Zelensky said that Ukrainian forces are resisting the assault, but the Ukrainian president has also questioned the effectiveness of the West sanctions on Moscow.
This morning, we are defending our state by ourselves, as we did yesterday. The most powerful forces in the world are watching from a distance. Have yesterday's sanctions convinced Russia? We are hearing in our sky and seeing on our land that this is not enough.
Now we have reporters around the world, so let's get an update. First up, let's go to Moscow and to our Henry Meyer. Henry, this is a really fast-paced situation. Things are changing quickly. Catch us up to speed on what things look like on the ground in Ukraine, where troops are, and what the latest is.
Right. I mean, we had a lightning advance that began yesterday where Russian troops entered Ukraine from 3 different directions. They carried out a punishing barrage of artillery and airstrikes and missile strikes that wiped out Ukraine's air defense capability. They now have control of the skies. And what we're seeing is they're closing in on the capital, Kiev, where overnight there were major missile attacks.
All right, in Brussels, we also have our reporter, Maria Teneo. Maria, let me bring you into this as well. Yesterday, we have this emergency EU summit. What are we seeing in terms of the European response and the new sanctions and their ability to impact Russia?
Well, Danny, yesterday at 2 a.m. in the morning, European leaders agreed to what is essentially, in many ways, the biggest sanctions package they've ever put on the table against a single country. We know this is going to hit many industries of the Russian economy, and we know that the European Union at this point is really trying to prevent Vladimir Putin to fund what they believe could be a continuous war effort. By the way, in this call, and this is an important detail, Volodymyr Zelensky, the Ukrainian president, jumped into this conference call with European leaders, the 27 of them in that meeting. Of course, the flip side, however, is the fact that they kept the SWIFT payment system out of the sanctions package. The Ukrainians had said, if you don't support this, you will have blood on your hands. You need to completely isolate Russia by cutting them off the SWIFT. Now, what you're seeing here, of course, is growing frustration from the Ukrainian government and a lot of this response, Danny, to different priorities. What is clear now when you look at the European response is that they're betting on a long-term economic demise of Russia. But the problem, of course, as you know, is the Ukrainian people, they say we have short-term needs and we need help on the cash front and also the weapons. On those questions, Zelensky yesterday, in a very tough speech, said we had no perspective from our European colleagues on the fundamental questions.
Now, to that SWIFT point, this is something that UK Prime Minister Boris Johnson has floated as a tool. Our very own Lizzie Burden is outside of Downing Street for us. Lizzie, at the start of this, at the start of sanctions, Boris Johnson was accused of not being up to task, not being at the level that the EU and US were. New sanctions, of course, unveiled yesterday. As I mentioned, he brings up SWIFT. How does he stand now compared to the rest of Europe?
Yes, Danny, in front of Downing Street, well, on the top of the building, the Ukrainian flag is flying. But apart from that outward display of solidarity, as you say, the first set of sanctions were decried as meaningless, not just by the opposition Labour Party, but also by some of Johnson's own MPs and city executives. So, as you say, he has ramped up the sanctions package. The government says it's the toughest Britain's ever imposed. It includes an asset freeze on all major Russian banks, and he wants to go further. Johnson wants to ban Russian access to SWIFT, but it would require international cooperation, which, as Maria says, isn't forthcoming at the moment. But the risk for the UK is the blowback of any of these measures because of just how closely the City of London has courted emerging wealth in the decades since the Cold War.
Let's also get the view from D.C. and Bruce Einhorn. You join us as well. Bruce, Biden also had a speech yesterday, new sanctions from the U.S. alongside U.K. and Europe. Maria and Lizzie gave us that view. How far is the U.S. willing to go?
Well, President Biden talked about the possibility of cutting off SWIFT, but said that that's not in the current sanctions because of a lack of consensus, and pointed to opposition in Europe. It does seem like it is still a live issue in D.C. We know that there are Democrats and Republicans alike on Capitol Hill who have called for this. The administration's argument at the moment is that the sanctions that target specific banks, including five large banks, that those already cover nearly 80% of the banking assets in Russia. So the sanctions that the U.S. has imposed do a lot of what the critics who say that SWIFT needs to be part of it that it accomplishes a lot of that already. In addition to those sanctions, the U.S. also imposed additional sanctions on Russian imports of U.S. technology products like software and semiconductors. Significantly, the U.S. is also able to prevent those from being sent via third countries. And the U.S. also sanctioned members of Russia's elite and family members and state-owned enterprises. So that's the full package at the moment.
Bruce, thorough as always. And really thank you to everyone. A very fast-moving situation. We appreciate the update. That's Henry Meyer, Maria Tadeo, Lizzie Burden, and Bruce Einhorn. Now let's get to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Danny. ECB policymakers are signaling that the exit from stimulus may be delayed but not stopped this year, given the conflict in Ukraine. Austrian Central Bank Governor Robert Holzmann told Bloomberg that Russia's invasion does not fundamentally change the outlook for the Eurozone economy, though it may slow the unwind from an ultra-loose policy. His view was echoed by officials from at least 2 other central banks. The Federal Reserve still looks set to raise rates next month, despite uncertainty posed to the global economy by Russia's invasion of Ukraine. Officials, including Cleveland President Loretta Mester and Atlanta's Raphael Bostic, are stressing the need to confront inflationary pressures. Meanwhile, Governor Christopher Waller says a half-point move higher could be justified next month if economic data keeps coming in hot. Bloomberg's learned that President Biden has decided on a nominee for a seat on the Supreme Court. No word on who it is when the selection will be announced. The president has already said he would select a black female. That would fulfill a promise he made during the 2020 campaign. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Danny.
Laura, thank you so much. Now, up next, we're going to continue to bring you the latest market reaction to the crisis unfolding in Ukraine. If you have any questions for us, any of our guests, IB plus TV Go on your terminal. This is Bloomberg. Welcome back to Bloomberg Surveillance. This is the early edition. Now, markets slightly rebounding this morning after a tumultuous session yesterday that saw Wall Street ending higher as we continue to evaluate the ongoing invasion of Ukraine. Joining us now is Sweta Ramachandran, Global Equities Investment Manager at GAM. Sweta, thanks so much for joining us. This is a question that I've been asking to a lot of guests. When you look at a day like yesterday, over the past 24 hours, the fast-paced movements of not just markets, but of course the unfolding situation, do you just rip up the playbook?
It certainly can be tempting to do so with the speed at which these events are occurring, but I think sometimes a step back and some perspective is needed. In that light, I think this morning's recovery in Europe versus the very sharp snapback that we saw in U.S. equities yesterday is perhaps interesting of what lies ahead for European equities versus U.S. equities, given the greater exposure that the former has to the unfolding situation in Russia and Ukraine than perhaps the latter, where the U.S. economy is a little more defensive and insulated because of its energy self-sufficiency.
Yeah, I find that fascinating because before the tensions and the crisis unfold, there had been this narrative of 2022 will be a year for value. It'll be a year where specifically regions like Europe are the ones to outperform the U.S. Do we have to completely reimagine that narrative given the potential economic consequences?
That very strong rotation to value is what people were calling a regime change that we saw since the start of January has actually almost fully reversed now. So that outperformance of European equities relative to the U.S. Has pretty much all but given up all of its gains as of yesterday's close. That said, I don't think it's going to be that easy. It's not a case of throwing the baby out with the bathwater because there are still pockets of value. And I would say commodities, by and large, still fall in this bucket, given that the integrated oil companies, their performance has really lagged the very sharp recovery in oil prices. Those still remain interesting. I think what could be under question is perhaps the outperformance of financials. And that's what we're seeing of the last 2 days in Europe as financial conditions perhaps tighten as a result of unfolding actions.
Okay, so it's still some of those value names, but as you say, not banks, for example. When you look at the U.S., so we had this really big rebound yesterday. What does that tell you in terms of impact that this could have on U.S. assets?
I think U.S. assets are currently being seen as somewhat of a safe haven. Dollar has done very well on the back of unfolding developments. There's definitely the reality is that the U.S. market is less operationally geared to even growth. So shaving off a percentage of GDP growth has far fewer ramifications for U.S. equities than it does to European equities. And as the reality of perhaps a growth slowdown starts to be priced in, people are, I think, making the judgment that U.S. equities are a safer place to be. I mean, there's also the case to be made for valuation, where on a relative basis now European equities look very undervalued to U.S. equities. But in the first instance, I think there will be this flight to safety first before the question of valuation starts to dominate investor attention again.
Right, well, you get a high beta sector in the U.S. like tech that sells off more severely yesterday. It is down more today, pre-market down 1.2%. Is that really just, again, because this is a higher beta sector that it reacts like that? Because it is this strange link when you see geopolitical angst translate into U.S. tech selling off.
Yeah, it's very hard to draw short-term conclusions from daily market movements because geopolitical tensions, while they cause a lot of whipsaw and volatility in the short term, in the long term, they don't really affect the trajectory of markets permanently. So I think what we're seeing now is typical volatility because no one really knows the end point of the current situation, what the intended actions of the current military actions are, whether it's occupation or whether it's to seek regime change. And I think all of those, while there is still uncertainty, will still be in this space of volatility where there's probably no clear direction for markets in the short term.
All right, Sweta, thank you very much. You're going to stick around with us. Sweta Ramachandran, Global Equities Investment Manager at GAM. Now, we also have live pictures to bring you of Russian Foreign Minister Sergei Lavrov. He's meeting with the self-proclaimed Deputy Foreign Minister of the rebel-controlled Donetsk region. Now, it's also the self-proclaimed Foreign Minister of the rebel-controlled region there as well. We're going to continue to show you these pictures. Again, this is a very fast-paced moving situation in terms of where Russian troops are and reactions as well. So we're going to continue to bring you the latest market reaction to the war in Ukraine. If you have any questions for us or any of our guests, IB plus TV Go. This is Bloomberg.
My preference is to increase the target rate for the federal funds rate 100 basis points by the middle of this year. That is, I expect inflation to remain elevated and only show modest signs of deceleration over the next couple of months.
Federal Reserve Governor Chris Waller discussing the possibility of more Fed rate hikes, reassuring investors that the central bank's outlook won't be derailed by events in Ukraine. Still with us is Sweta Ramachandran, Global Equities Investment Manager at GAM. So we did see yesterday, as the market was selling off, of course, it rebounded. We started to see investors back off on their bets that 50 basis points would be the call in March. Does the events unfolding in Ukraine, should it give the Fed pause in terms of acting really swiftly and sharply in their next meeting?
Certainly, these developments will give central banks around the world a more cautionary approach. That said, I think the Fed is sort of walking a very tightrope between managing the second-round effects, basically, that have permeated consumers on wages and expectations of inflation, which have actually come from commodity prices, from not being able to raise rates. So the flexibility for maneuver that they have is far more limited, given wage inflation is already pretty much entrenched in the U.S., running at about 4.5%. In the EU, perhaps it's a different story. The ECB has certainly suggested that they may look at delaying the rate hike trajectory, and that's because wage inflation hasn't really taken hold here. It's running at half the clip that it is in the US. Even if the Fed doesn't increase by 50 basis points in March, I think it's reasonable to assume that the trajectory by the end of the year, we will still get to about 2.2%, which is what the market is expecting.
And of course, in Europe, it's a different picture because they, of course, are more directly exposed. But I just want to bring us some breaking lines crossing now. This is from Interfax, of course, the Russian local news agency, is saying Russia has prepared sanctions to hit West's weak points. This comes after Putin himself did warn that there would be a reaction to sanctions put on Russia. So again, Russia saying it has prepared sanctions to hit the West's weak points. And the Interfax here citing Russian Parliament upper chamber speaker. Sweta, so possible retaliation from Russia, and there continues to be this concern of what happens in the economy in Europe as we continue to see gas, commodity prices go higher even after they were already extremely high. Can the ECB go forward with any form of tightening?
It certainly seems that is likely to be delayed, even as commodity inflation starts to bite. These increasing uncertainties are likely to shave off a decent proportion of the expected growth for the European region. And Europe is very cyclically geared, so a 1 percentage point shaving off of growth actually has meaningful impact for the region's equities, which is quite bearish for European equities, hence the reaction in the markets today.
All right, Sweta, thank you so much for joining us this morning. Great to have you on the program. That's Sweta Ramachandran, Global Equities Investment Manager at GAM. This is Bloomberg. Russia's invasion of Ukraine intensifies. Moscow forces seize Chernobyl and close in on the capital, Kyiv. The U.S. and its allies ramp up sanctions, but Russian energy and SWIFT are exempt. Still, President Biden vows severe costs for Putin's actions. Zelensky says Ukrainian forces are fighting back, but he says the West sanctions don't go far enough. Good morning and welcome to Bloomberg Surveillance. This is the early edition. I'm Danny Berger in London, standing in for Francine Lacqua. Now, we have seen a rebound in markets. It was very notable yesterday in the U.S., not as strong here in Europe. Our last guest, Sweta Ramachandran, saying that this shows how much risk and fear is still in the European system, that it's not coming back as strongly. Some of the big gainers, though, basic resources, as we continue to see commodity prices move higher. Russian assets up 13% in the MOEX equity index. And we are looking at bond buying still coming through, up 3 basis points. Your 10-year yield at 193. Now, natural gas also off of its highs from yesterday. It's down 23%. Russian gas is still flowing from Russia through Ukraine into the rest of Europe. Sanctions perhaps not as harsh, allowing for those prices to come down. Wheat prices also falling after yesterday's rally. Brent crude still around $100 a barrel. Now, Joe Biden, he did impose new sanctions on Russia, and Western nations also warned that Ukraine's capital could fall.
We've cut off Russia's largest bank, a bank that holds more than 1/3 of Russia's banking assets by itself. Cut it off from the U.S. financial system.
We will, of course, use Britain's position in every international forum to condemn the onslaught against Ukraine.
We took a political decision to add an additional package of mass sanctions, which will be painful for the Russian regime.
We will never tolerate any attempt to change the status quo by force. We will tighten our sanctions and stand in solidarity with the international communities.
There was certainly duplicity. A choice, a deliberate choice, was taken consciously by President Putin to launch a war.
We will continue on a remorseless mission to squeeze Russia from the global economy piece by piece, day by day, and week by week.
Now we have to meet the moment. We will hold the Kremlin accountable.
We are not going to harm the world economy system we are a part of as long as we are a part of it. I believe our partners have to understand it and not aim to push us out of the system.
Now, at the same time, Russia's invasion of Ukraine is intensifying. Russian forces have seized the highly radioactive nuclear plant in Chernobyl, 80 miles north of the capital, Kyiv. In a speech this morning, Volodymyr Zelensky says that Ukrainian forces are resisting the assault, but the Ukrainian president has also questioned the effectiveness of the West sanctions on Moscow.
This morning, we are defending our state by ourselves as we did yesterday. The most powerful forces in the world are watching from a distance. Have yesterday's sanctions convinced Russia? We are hearing in our sky and seeing on our land that this is not enough.
Let's get the latest from Moscow with our editor, Tony Halpin. Tony, it's a fast-paced moving situation. Where do we stand now in terms of where Russian troops are in Ukraine?
Yes, well, Russian troops have been advancing on three fronts, really, from the north through Belarus, Crimea in the south, and as you noted, they're approaching the capital, Kiev. There have been reports of missile strikes on Kiev overnight and fighting on the outskirts between Ukrainian and Russian forces. Ukraine has said that it intends to defend itself and will attempt to hold its capital, but clearly there's an awful lot of pressure coming now from Russian military forces.
All right, Tony, thank you very much for the latest update. That's Tony Halpin, our government editor in Moscow. Now, joining us is Tyler Kostra, assistant professor of politics and international relations at the University of Nottingham. Tyler, thanks so much for joining us this morning. First, we had the U.S., UK, and Europe announce new sanctions yesterday that stopped short of the most extreme of removing Russia's access to SWIFT, of halting flows of gas. Your first take on that?
Well, I mean, that's what Russia is really scared of, right? This is what the majority of Russian international trade is oil and natural gas. And if you're not going to stop that, if you're not going to stop the flow of oil and natural gas into Europe, if you're not going to disconnect Russia from the SWIFT financial system, if the U.S. is still going to allow dollar clearing of energy trades through New York banks, then effectively these sanctions are a little grab bag of obnoxious things to do to Russia, make Sergei Lavrov go and get a visa the next time he needs to fly to Brussels or something. But they're not substantial. They are simply a little bits and pieces, crumbs, to try to stop an invasion.
If sanctions were to reach this level of blocking them from SWIFT, of blocking commodity flow as well from Russia, is that enough to potentially stop Putin?
You know, I don't know what would be enough. Obviously, Putin is willing to mobilize over 100,000 troops, invade and dismember a sovereign country, deal with the casualties that is going to result. But I think we owe it to the Ukrainians to try. You know, we had, the United States and the UK gave security assurances to Ukraine when it gave up its nuclear weapons in 1994. And I think at a minimum, we should say to the Russians, look, if you go in and start a destabilizing war in Europe, you're not going to be able to go off and clear your energy trades through New York banks.
Well, this is sort of the confusion to try to sort out. Is the reason that Europe, UK, US not going there because they want to have something in their back pocket? They want an incremental approach to sanctions? Or is it really just not having the stomach for the economic consequences of what blocking gas, for example, would do?
Well, I don't understand what they think is going to happen later. I mean, we have Russian tanks on the border of Kyiv right now, right? The country is in a very precarious situation and could fall within the next 24 or 48 hours. So why would you hold back? I think what it would be is a very large concern of what higher energy prices in Europe would do to European consumers and European voters.
Yeah, and right now we're looking at a great opinion piece from Javier Blas, who talks about that the sort of shock and awe approach could be what you're talking about, that the West is actually financing Putin's war in Ukraine, buying hundreds of millions of dollars worth of Russian natural resources every day. Either stop buying them or find a way to stop the payments. Now, there has also been a lot made of this idea of Fortress Russia, that they've prepared themselves for sanctions. They're running surpluses. They have raised capital. How would you describe, again, this idea of Fortress Russia and their impenetrability of sanctions from the West?
Well, I don't think, I think Russia has done a lot of work to make sure you're right, that they don't need to rely on Western financing for government debt, that they don't need to go off and raise capital in Western markets to the same extent. They have very large foreign currency reserves that can be used to prop up the ruble for a time. So the main economic weak point in Russia is the fact that it's a petrostate and that its economy depends on selling oil and natural gas to the West. And so long as we continue to allow them to do that, we're not actually taking them on where it would hurt them. Instead, we're putting on sanctions that will harass some Russian banks and cause people to have to move accounts from one bank to another. But these aren't substantive sanctions to deal with the worst crisis in Europe since 1945.
Well, I guess sanctions can go two ways, Tyler, and we have learned, Interfax at least is reporting that Russia has prepared sanctions to hit West's weak points. They're citing Russian Parliament upper chamber speakers saying this. What could Russia do on the flip side that would, as they're describing, hit the West's weak points?
They can't unless they cut off the flow of gas. And of course, that would obviously cut off the payments for gas. Otherwise, look, most of what Russia exports are natural resources. And apart from energy natural resources, they export some metals, they export some, foodstuffs. All of that could easily be transshipped. I'm not terribly worried. If Russia says we're not going to sell palladium to the U.S., then all they'll do is they'll wind up having some buyer in some third country purchase it and then sell it to the U.S. That's not a terrible concern. The concern,
I mean, Go ahead, Tyler.
Yeah, the concern is, frankly, oil and natural gas, and if neither player wants to, if both players want to continue to sell that and buy that, then there is no effective cutting off Russia from global trade.
Yeah, it's almost this sort of twisted game of chicken of who's willing to push it the furthest and really see that damage from the economic consequences of oil and gas. Tyler, thanks so much for joining us this morning. Tyler Kustra, Assistant Professor of Politics and International Relations at the University of Nottingham. Now, we continue to see European equities march higher. They are up by about 0.8%. Not as strong as what we've seen in the U.S. sessions, but basic resources leading the gains as commodity prices move higher. Russia stocks also up 13%, on track for some of their biggest gains since 2008. Of course, that's following the biggest loss for Russia stocks on record, down more than 30% yesterday. So we haven't even really have some of those losses. And geopolitical risks still present in these markets. Bond buying still in. 194 is where we stand on your 10-year yield. Now, coming up, geopolitics and the latest fallout from the war in Ukraine. We're going to speak to Wolfango Piccoli, Teneo co-president of Political Risk. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Now let's take a look at how some of the major newspapers are covering the war in Ukraine. The Daily Telegraph, they lead with new Cold War as Putin strikes. The Times, a dark day for Europe. Putin invades is on the Guardian's front page, and the Liberation in France says unthinkable. And finally, Russia's largest independent newspaper published this edition in Ukrainian as a show of solidarity against Putin's invasion. You can see there the color of the flags of both Russia and Ukraine. Joining us now to discuss this is Wolf Piccoli, co-president of Teneo's Political Risk Advisory. Wolf, thanks so much for joining us this morning. Now, it really was a fast-moving and fast-developing situation. Yesterday, it caught some by surprise, of course, others perhaps not so. But this really fast-paced action by Putin of troops into Ukraine bordering on Kyiv. What do you make of what the calculation is by Putin in terms of reaching what his end goal is?
Well, first of all, I think the aim is trying to reach the end goal as quickly as possible. And the end goal is a capitulation of the government in Kyiv, its replacement with an entity that is more compliant, the military crippling of Ukraine, this possible partition eventually, and this economic, bringing the country down economically. That is the aim. Now the question is how long it's going to take. Potentially not much. It depends on what we're going to see in Kyiv over the next few hours, if not days. whether the resistance that we've been hearing about will really materialize, or whether after being under Russian attack, it will melt quickly.
Should that happen, Wolf, talk me through how much of a game changer this would be in terms of European security.
It's huge. Well, Ukraine at the end of the day is already lost. It's just a question of time at this point, and how painful and how much bloodshed we will see. This will lead to a redesign of security in Europe. It will lead to a Europe where NATO, the ability of NATO and the European Union to ensure peace in Europe is being questioned. We're gonna have a huge area of destabilization that goes from Estonia to Poland, from Romania all the way to Turkey. We're gonna have to see more defense spending. We're gonna have to try to revive NATO if we can. That will depend very much on the US. And in the short term, we might even face a major migration crisis as well. So this is huge. And what is somewhat interesting to see here, that the European leaders last night spent hours to talk about sanctions rather than focusing on where Putin is going to eat next.
Well, I want to pause for a moment on one of the first things you just said there, that Ukraine is essentially already lost. Does that mean when Western nations are discussing sanctions, they're certainly not sending troops in there, but that none of these measures will work in terms of undoing what's already been done in Ukraine?
No, it won't. We have seen it before, this movie. We have seen it in Georgia in 2008. We have seen it in Crimea in 2014. We have seen it now. Sanctions do not work, do not deter Putin. They might, extract an economic price over term, but sanctions right now, they are designed to do one thing, to make ourselves in the West feel better. Because the reality here is that meanwhile, you have 45 million Ukrainians facing Russia alone. And the message has been very clear. Not a single NATO soldiers will be deployed or risk his life or her life to defend Ukraine. That is the reality.
Is that a mistake that troops from NATO aren't being deployed on the ground?
The mistake was being done for years. In the sense that there's been a consistent appeasement of Putin without, meanwhile, beefing up the military power. So the mistake has been, going on for a long time. If you look even on the U.S. side here, every single U.S. president, starting from George W. Bush Sr., they've been trying to appease Putin. And they didn't get much in exchange, but they still continue. And now we are paying the price of that. We are trying to do deterrence with sanctions. It's simply not working. Putin is winning. He's winning. He won in Georgia. He won in Kazakhstan recently. He won in Belarus. He won in Moldova in the past, and in the Caucasus, and now he's winning in Ukraine.
He's winning in Ukraine. That is lost, in your opinion, Wolf. What does that mean going forward for other areas surrounding Ukraine and Russia, for Poland, for Romania, for Baltics? Should they be worried as well at this point?
I think there are lots of concerns in these countries, and the question will be whether NATO, not the European Union here, but NATO, and when we talk about NATO, we talk mainly about the US, will be able to provide the reassurance that this country needs. So we need to see significant deployments of armor, of manpower in these countries. And also we need to make very clear that Article 5 cannot be challenged by anybody. So there is lots of nervosism, lots of concerns in this country, and they've been raising this issue actually to give them credit for some time, but these messages were ignored by the leadership in Washington, Berlin, Paris, and so on.
Wolf, really great to have you on this morning with us. That's Wolfango Piccoli, co-president of Teneo's Political Risk Advisory. Now let's get your Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Danny. Things had already become tight for Russia's wealthiest individuals. Now they've gotten worse since Vladimir Putin's decision to invade Ukraine. In less than 24 hours, Russian billionaires lost $39 billion, more than they had lost up to that point this year. A handful of billionaires are subjected to sanctions from the West because of their ties to Putin. Morgan Stanley has disclosed that US regulators and prosecutors are investigating various aspects of its block trading business. A regulatory filing admitted that the bank itself is under scrutiny. Authorities are digging into how bankers and money managers carry out stock transactions big enough to move prices. That's the Bloomberg Business Flash. Danny.
Coming up, we're live in D.C. and we explore what new U.S. sanctions on Russia mean for the war in Ukraine and what we could see in terms of further measures. This is Bloomberg.
Cut off Russia's largest bank, a bank that holds more than 1/3 of Russia's banking assets by itself. Cut it off from the U.S. financial system. And today, we're also blocking 4 more major banks. That means every asset they have in America will be frozen.
President Joe Biden there announcing new sanctions yesterday. Joining us more on this from Washington, D.C. is congressional reporter Emily Wilkins. Emily, so the U.S. yesterday stopped short of issuing the harshest sanctions of blocking Russian access to SWIFT, U.S. oil cut off. How then would we characterize the sternness of the latest sanctions coming from the U.S.?
So President Biden has really portrayed these latest sanctions as being quite strict. They've been focused on targeting a number of top Russian banks, freezing more than $1 trillion in assets, and really targeting Russian elites. And this is something that the White House does believe is going to be able to inflict pain on Putin as well as on Russia's economy over time. But you're right, they did stop from doing some of the more drastic sanctions. Like, we didn't see any sanctions on the energy sector or on aluminum. And the White House says that that's because they recognize that the world is going through this global recovery and they don't want to impair that with the sanctions. And on SWIFT, that's something where Biden said, you know, we're doing this with our European allies and they're not comfortable taking that step yet. Although you're right to point out, there are Democrats, top Democrats in Congress that are saying we need to look at some of these sanctions. We need to sanction Putin directly. We need to sanction its energy economy. And we need to go ahead and remove the financial institutions from the SWIFT system. So there are absolutely calls right now for President Biden to do more. It will be interesting to see when lawmakers get back to D.C. next week if they pass their own sanctions proposal and what is included in that.
Emily, quickly here, we have less than a minute. If they were to impose sanctions on oil and gas, is that politically an issue given the higher inflation that brings? 30 seconds.
I mean, higher gas is always going to be an issue for any sort of sitting president from a very political standpoint. And you've heard Biden be out front with this, admitting that any sort of conflict is going to raise prices. He's also said his administration are looking at ways to lower the cost at the pump for Americans. But so far, options like removing a federal gas tax don't seem to be on the table.
Emily, thank you so much. That's Bloomberg's congressional reporter, Emily Wilkins, in D.C. Now, Bloomberg Surveillance Early Edition, it will continue in the next hour. Matt Miller, Kailey Leinz, and Anna Edwards join for that as we continue to monitor a rebound in markets. This is Bloomberg.
The sanctions against Russia will match the level of aggression.
We will continue on a remorseless mission to squeeze Russia from the global economy.
We've cut off Russia's largest bank, cut it off from the U.S. financial system.
We are not going to harm the world economy system as long as we are a part of it.
Have yesterday's sanctions convinced Russia? We are hearing in our sky and seeing on our land that this is not enough.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Friday, February 25th. Our top stories today. Ukraine fights back. The country's president says his nation is still resisting on day 2 of the invasion, but Russian tanks and troops are pushing closer to Ukraine's capital. The West ramps up the sanctions. The U.S. targets Russia's largest bank and a number of the country's oligarchs. The EU plans to limit Moscow's access to Europe's financial sector. The word in the markets is volatility. European stocks are up, U.S. futures are down, and Brent crude fluctuates around $100 a barrel. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz over in New York. And Kailey, here in Europe, equity markets taking the opportunity to bounce a little. Certainly utility stocks to the upside, given what we've heard on what is and is not included in the sanctions.
Well, and we saw a little bit of that bounce taking shape in Asia overnight as well, Anna. After the declines of Thursday, it was broadly a positive day for the regional benchmarks there. The MSCI Asia Pacific Index as a whole was up about 1 percentage point. You did have Hong Kong stocks lower, but Japan outperformed, and Chinese stocks also rose by about 1%. Part of that story in China, the PBOC injecting $46 billion of liquidity into the system. That is actually the biggest cash injection going back to 2020. So that aided Chinese stocks. And also, interestingly, we are seeing some strength for the Chinese yuan as well. It's stronger against the dollar by a little more than 0.1%. 631.40 is where we sit on the yuan at the moment. The yuan, interestingly, acting as somewhat of a haven asset amid all of this geopolitical turmoil that the market is dealing with. One haven asset not behaving in that way today, though. In fact, no bid for bonds really globally, or at least that was the case in Australia, with selling pressure coming in. The 10-year yield moving up to about 7.5 basis points to 2.233%. Not a lot of bid for bonds overnight. Matt.
A little bit of a bid for the U.S. 10-year, but really not much to write home about. The S&P futures right now down about 0.8%. Of course, we had our bounce back yesterday, the 10-year at 194.43. Gold is still up over $1,900 a troy ounce, 1910.46. Only a gain of 1/3%, so also not a substantial move. And Bitcoin, although it's only up 0.6% at 38,637, it's back to the levels we saw at the beginning of the week, pre-invasion, if you will. So Bitcoin showing a little bit of risk-on indication. Anna, what do you see in Europe?
Yeah, well, we see a bit of that risk on coming through here in here in Europe, Matt. At least in the very short term, it seems that the fact that the sanctions didn't address the SWIFT payment system and didn't address the energy markets means there is, at least in the short term, a little way for these stocks to rally here in Europe. And catching up with the US latter part of the trading day yesterday. How much does that narrative, though, deserve to stay in the US, and how much of it should be reflected here on this very green European map today? Even the German market up by 0.75%. The CAC 40 and the FTSE 100 up by more than 1%. Energy prices, of course, key to this. We are seeing also a rebound in the Russian stock market this morning, up by 14%. So not erasing the losses of yesterday, but clearly a little bit of relief in terms of that Russian complex about what was not sanctioned, at least at this stage, because we've heard from a number of leaders globally that there could be further sanctions to come. We mentioned in our headlines that we're flirting with $100 a barrel. We are either side of it this morning here on the London trade. We have, of course, heard that energy is not part of the sanctions at this point. We also know that the US is going to release from its strategic petroleum reserves, but we wait to hear from OPEC next week. That could be the next interesting line to watch there. Natural gas prices, a real drop in those today. We saw these up this time yesterday, up around 30%, but because of that absence from the sanctions, now down by 20%. We actually saw Russian companies buying more Russian gas yesterday than they had in a very long time. More European companies, buying Russian gas than they had in a long time, due to technicalities to do with the pricing of Russian gas. As it became cheaper, it was therefore bought up by those European corporates. An interesting one to sit alongside the geopolitics. The euro down by 0.1%, looking a lot calmer than it did this time yesterday. It was down by more than 1% then. We are going to hear from Christine Lagarde at the ECB a little bit later on. We've had French inflation data out this morning, Kailey, that certainly surprised to the upside. A reminder, if we needed one, that if this is inflationary, if this geopolitics is inflationary, we already have plenty of inflation to worry about.
Yeah, so the central bank reaction function is definitely something we will keep an eye on. And if yesterday was any indication, Anna, the moves we're seeing this morning could look very, very different come this afternoon. So we will all have to pay close attention. And of course, there are a number of events as well taking place today that maybe could be potential catalysts. Up first, the NATO meeting will be taking place. Russia, of course, first and foremost on the agenda as it relates to the invasion of Ukraine. Then there will be an informal Eurogroup meeting in Paris. The ECB's Christine Lagarde, as Anna was alluding to, will be speaking at 9 a.m. p.m. New York time, along French Finance Minister Bruno Le Maire. And finally, we'll get some U.S. economic data, including durable goods orders, PCE deflator, which is the Fed's preferred inflation gauge, as well as personal income and personal spending. Plus, you have University of Michigan sentiment data coming at 10 a.m. Eastern time. So a very important read coming on the inflation front. That could tee up the Federal Reserve decision in just a few weeks, Matt.
All right, but of course we are focused on what's going on in Ukraine. The president, Volodymyr Zelensky, said Moscow-led forces were continuing attacks on military and civilian targets for the second day of the invasion. President Zelensky said Ukraine's military had so far prevented Russia from achieving its objectives. He released a video this morning.
This morning, we are defending our state by ourselves, as we did yesterday. The most powerful forces in the world are watching from a distance. Have yesterday's sanctions convinced Russia? We are hearing in our sky and seeing on our land that this is not enough.
Let's get more with our reporters from around the world. From Moscow, we're joined by Bloomberg's Henry Meyer, who covers politics and international affairs. From Brussels, we're joined by our European correspondent, Maria Teneo. And from Washington, D.C., we're joined by Bloomberg government reporter Emily Wilkins. Henry, let's start with you in Moscow. How is this being taken at home? We don't see the kind of protests that we would have in previous years, but maybe also not the fanfare support.
Well, I mean, I think there is clearly a lot of public disquiet at what is happening. I mean, state television is putting across this message that Russia was forced to act because of a so-called genocide by the Ukrainian government forces against separatist areas. There is, that message does seem to get through to some extent, but I think, they see the invasion taking place as totally disproportionate. There are a lot of family ties, friendship ties between Ukraine and Russia. For ordinary people here, this is a huge shock.
Henry, thank you very much for the update. Bloomberg's Henry Meyer joining us there. Let's get the European perspective. EU leaders backed a broad sanctions package on Thursday that will limit Russia's access to Europe's financial sector and restricting key technologies. European Commission President Ursula von der Leyen spoke in a news conference earlier today.
The European Union stands united. Tonight, European leaders were fully aligned in condemning the atrocious and unprovoked attacks. Now we have to meet the moment. We will hold the Kremlin accountable.
Let's get more from on the European response with our European correspondent, Maria Tadeo, who is live in Brussels. A lot of similarities by design in what we've heard in terms of sanctions from Europe, from the US and from the UK, and indeed from other countries as well. Maria, what's the latest?
Yes, Anna, and arguably on paper, this is the biggest sanctions package the European Union has ever put on the table with or against a single country. But you could hear the frustration of the Ukrainian president yesterday and today. By the way, he joined European leaders yesterday in this call in full military gear. What he did say, however, is that this is not enough. Ukraine is seeing very heavy fighting overnight, and he also said that he fears he is the #1 target of the Russian government, but nonetheless, he's going to stay put in Ukraine. He's not leaving the country for the time being. And Anna, the problem here, of course, is that the European aspect of this, the European take on these sanctions, is that they're aiming and they're in this for the long game. What they want is a long-term effect that is going to see a decline, a demise of the Russian economy. The problem, of course, for the people of Ukraine is that they have short-term needs. And what they say they need is cash, funding, and weapons for the time being that is not really arriving as soon as they want it to be.
All right, Bloomberg's European correspondent Maria Tadeo in Brussels for us. Thank you so much. Now let's turn to Washington, D.C. President Biden imposing stiff sanctions on Russia as Western nations warned that Kyiv could fall. But the president said booting Russia from the critical SWIFT global financial messaging system is off the table for now.
The sanctions that we propose on all their banks have of equal consequence, maybe more consequence than SWIFT #1. #2, it is always an option, but right now that's not the position that the rest of Europe wishes to take.
Let's get more on the U.S. response now from Emily Wilkins of Bloomberg Government, who is in D.C. for us. Emily, SWIFT not on the table for now. Biden said yesterday that sanctions on Putin himself are on the table, yet when asked by a reporter in that briefing yesterday why he didn't make that move yesterday, he didn't answer the question. Could we see that move coming down the line? Well, that's something that lawmakers within Biden's own party are really pushing for. They want to see not only sanctions on Putin, they want to see sanctions on Russia's energy sector, and they do want to see Russian financial systems kicked off of the SWIFT system. And these are all things that you're hearing Democrats and Republicans alike calling for at this point. Now, the White House has explained why they didn't move for the SWIFT. They explained they don't want to hurt the world economy, which is why they didn't make sanctions on energy and aluminum. And they've talked a little bit about why they've put forward what they have. I think a very interesting angle to watch here. Lawmakers are not in D.C. right now. The House, the Senate, they have left Washington for the week. They won't be back until Monday. And it'll be very interesting to see what type of sanctions package Congress begins to push. They were working on one before they left for their current scheduled break, and they're expecting to pick that one back up. We know that lawmakers have been briefed yesterday and will receive more briefings next week on the situation in Ukraine. And it's not just about what the sanctions are going to be. I think Maria pointed out that there's a big question about what aid Ukraine's going to get at this point. That's very much on the minds of lawmakers. You heard the White House yesterday say that they would accept Ukrainian refugees. They want funding for that. And you've also heard talk about as much as $1 billion in funding from the United States for humanitarian aid to Ukraine. That number is not finalized yet, but it shows the fact that the U.S. is trying to think about what they need to do to help Ukrainians.
Emily, thank you. Emily Wilkins of Bloomberg Government. Let's get back to the market response here. Traders gasping after a day of twists and turns. Let's get more on the market response. Bloomberg's Danny Berger has details. Danny?
And it really was a remarkable day in market terms yesterday. Just looking at the NASDAQ, for an example, it opens gapping down 3% and ends the day higher more than 3%. This is something that has only happened 2 prior times in history, in 2000 and in 2001. Yesterday, it really was that first gut punch of the tail risk has now become the base case. A market reacts by selling off. But as Scott Meinhardt said on Twitter, that war, unfortunately, it does provide buying opportunities as dislocations present themselves in the market. And investors could be looking at tech and saying, OK, here's a dislocation. This is a part of the market that is insulated from the crisis unfolding in Ukraine. So we go in and we buy the dip. I was also talking to iShares head of investment strategy at EMEA earlier today, who also said it was the busiest day for his clients in ETF trading. So it really just shows how active everybody was on the market as they tried to digest the rapidly unfolding events.
In terms of what we expect from central banks, we're already talking about the possibility of an about face at the ECB. What about the Fed as we see real rates start to head more negative?
This is the issue, right? There could be severe economic consequences, especially for Europe. But are they going to be so severe in the U.S. that you can't have the Fed continue on their pace of rising interest rates? Some of those 50 basis points bets in the market did come off. But we had Fed speakers over the past 12 hours, many of them saying that that is still the scenario that they're looking at. Chris Waller said that, even though he did say it's too soon to know how Russia's attack on Ukraine will affect the U.S. economy. We had Raphael Bostic, for example, saying that they can continue with their liftoff plan if the data continues to come in on the same way. Now, you have similar language coming from Barkin and Mester yesterday as well. But the message really is that the data could show something different, but the risk of the data is really high inflation, high gas prices, high wheat prices, high food prices, and that forces the Fed's hand even quicker and more severely, Kailey.
Well, and of course, we're going to get more data later on today. Thank you so much to Bloomberg's Danny Berger with a great look at the macro picture. But we also want to take a look at some micro stories, some stocks moving in pre-market trading here in the U.S. One to mention is Morgan Stanley. This firm now disclosing in a filing the DOJ investigation into its block trading practices. Of course, Bloomberg first reported on that last week, but now the firm acknowledging that it itself is under scrutiny and saying they are cooperating with that investigation. But that stock is down about 1.3%. A few other downside movers relate to earnings. One of them being Open Door Technologies, the online real estate platform. It missed expectations. It's down almost 10% as a result. And Coinbase also warning of a slowdown in trading in the current period. It's down 3.5%. But there are also some big earnings winners out there. A few really big upside movers in early hours. Etsy and Block, the former Square, both topping expectations. Block out with a really rosy outlook. And as a result, that stock up 16%. Etsy by 17%. Anna.
Kailey, just some breaking lines coming through from Italy. Mario Draghi, of course, the Italian leader, saying Italy will seek to boost LNG imports from the United States, and says Italy could reopen coal plants amid the Ukraine crisis. Such are the decisions that are being made by European leaders. Italy relatively exposed to Russian gas and relatively exposed to gas in terms of its energy mix. Coming up here on this programme, Peter Garnry. We'll speak to Peter Garnry, head of quantitative strategies at Saxo Bank, get his perspective on where the markets head from here. And on the international response, we'll talk to Fabrice Pottier, a defence policy expert who has advised two successive NATO secretaries general. This is Bloomberg.
Welcome back to Bloomberg Surveillance Early Edition. We are simulcast on Bloomberg Radio and Bloomberg Television. I'm Matt Miller here in New York with Kailey Leinz, Anna Edwards with us out of London. Now, I mentioned earlier that real yields are heading back down. And if you take a look at the 30-year, the 10-year, we've got, well, I can't see that far away. Usually it's on the screen right next to me. The 5-year real yields here, all coming back down as we had been starting to, after we had been starting to feel some relief. The question is, what will central banks do about this, if anything? Kriti Gupta joins us, Bloomberg Markets correspondent. And Kriti, how does this affect, the rest of the market?
Yeah, well, what's interesting is that just a couple months ago, we were talking about the volatility picture, the idea that in the first quarter of 2022, there was going to be volatility anyway, right? It was pegged to the idea of a very hawkish Fed, the idea that we didn't know how many rate hikes there were going to be, what the balance sheet runoff kind of looked like. No one saw a Russian invasion coming. Sure, there were warnings, but it wasn't something the market was taking seriously. It was kind of in the background of the Fed. The reason that you're seeing such a steep decline right now, essentially further than a correction, going past that 10% drop, and you're continuously seeing a 20% bear market in the NASDAQ, and no real dip buying that's really sustainable, that's where your geopolitical risk comes in. And that's really kind of front and center right now, where it comes to not only are you kind of pricing in a hawkish Fed, but you're also pricing in this risk. And that's something that hasn't happened yet.
Well, on the subject of pricing a hawkish Fed, has that really changed at all, even in light of some of these geopolitical issues that have now come to the forefront?
I think it hasn't, in that I think everyone's pretty prepared for a March rate hike to begin with, right? The margin was the difference. Is it 25 basis points? Is it 50? What this geopolitical risk has essentially done is take 50 basis points somewhat off the table. Sure, there are still bets there that the Fed is going to go big and go aggressive, but it's that element of added uncertainty that kind of pushes that a little bit towards the background. What's important to keep in mind, though, here is that when we're talking about how the Fed is actually going to be impacting inflation in particular, and specifically energy prices, remember, they're not targeting energy prices specifically. They're targeting the underlying demand, which will then feed into energy prices. And remember, they're also doing this with the help of Washington in coordinating a potential SPR release, as well as an Iran nuclear deal. So the Fed has a lot to kind of juggle right now. And for that reason, I think the consensus for now is that they're not going to go as aggressively on that first rate hike as previously expected.
And Kriti, good morning. Where does that leave the ECB? I was drawn to the comments of Robert Holtzman yesterday, notably quite a hawkish voice, talking about how maybe this delays the normalization, the policy normalization could be delayed. Is that going to be the unanimous view? We'll hear from Lagarde later.
Yeah, Anna, what's interesting here is that although I think the Fed kind of bets are a little bit insulated almost from this geopolitical risk that you're seeing in Russia and in Europe, the ECB is a very different story. And there's two cases to be really made here. Well, the first case is that, in no particular order, I should add, the first case is that does this pull up those ECB hikes simply because of the inflationary effects of this, specifically targeting energy, specifically targeting natural gas. And once again, I reiterate that when you do start to see those rate hikes or that kind of pull out of stimulus, they're targeting demand, they're not targeting supply. And that's really what's significant. The other argument, the flip side of that, is delaying removing that stimulus, once again, because of that geopolitical risk and because of that uncertainty. And that's really why you're seeing the bond market, specifically in Europe and sovereign spreads, kind of being very choppy right now.
Okay, Kriti, thanks very much for the update. Bloomberg's Kriti Gupta. Back to the geopolitics. We're seeing a briefing by the Kremlin spokesman, Dmitry Peskov, saying that normalization in international ties will come in time. Also saying the Kremlin, Russia will retaliate for the US and EU sanctions, and saying that Ukraine neutrality, that offer is a move towards positive, which looks to be a response to what we heard from Zelensky overnight, the Ukrainian president, where he was throwing that into the mix, talking about the possibility of neutrality. policy. We'll certainly get into a geopolitics conversation. Does that sound like Finlandization, that concept that diplomats like to throw around? We'll get to that shortly. The market analysis there, MLIV Go, that is the function to use on the terminal. This is Bloomberg.
Welcome back to Bloomberg Surveillance Early Edition. I'm Matt Miller with Kailey Leinz here in New York. Anna Edwards is in London. We are continuing to follow headlines from the Kremlin. Spokesman Dmitry Peskov saying that Russia will retaliate for U.S.-EU sanctions and that Russia thought the neutrality offer from Ukraine is a move towards the positive. Peter Garnry joins us next from Saxo Bank. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Ukraine is fighting back. President Zelensky says Ukrainian forces stopped Russia from achieving its objectives on the first day of the invasion. Still, Russian forces effectively eliminated Ukraine's air defenses, and they're closing in on the capital, Kyiv. The West tightens the screws. New U.S. sanctions go after Russia's largest banks and 4 other financial institutions. President Biden also targeted Russian elites and their family members. Meanwhile, the EU plans to limit Russia's access to Europe's financial sector and will restrict key technologies. The fighting in Ukraine is clouding the outlook for markets and the economic recovery. European stocks are higher, U.S. equities are lower, and in terms of the futures, that is, and oil is fluctuating near $100 a barrel. Meanwhile, gold and the dollar are pretty steady. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. Matt, what are you focused on as we head towards the start of U.S. trade?
Well, I would say those headlines from the Kremlin that we just broke are important to markets. You've got to pull, obviously a needle out of a haystack here, but the idea that the Kremlin spokesman said the Ukrainian offer of neutrality is a move forward, maybe giving markets a little bit of relief. S&P futures are still down, but coming off of their biggest losses. There is still a slight bid on the 10-year, but remember, we were at 194 just about 20 minutes ago. Now we're at 196.17. And Zelensky didn't actually offer Ukrainian neutrality. We pulled that out of his address, but he floated the idea of discussing Ukrainian neutrality, and that could be the headline that markets really grasp onto. Gold spot right now up, still 1910 a troy ounce, so little changed from when we spoke earlier, and Bitcoin also little change right now at 38,670, though still positive for the day. Kailey, what do you see in terms of pre-market movers?
Well, one mover really stands out to me, and that is Yandex, which is a Russian internet company that is listed here in the U.S. Over the last 5 days, this is a stock that has plunged 62% amid all of those geopolitical tensions and, of course, the ultimate invasion of Ukraine by Russia. So it is seeing a rebound this morning. It's up nearly 10 percentage points, but that only goes so far in recovering some of the losses it has seen over the last week. There are also some other way larger upside movers in U.S. trading, early trading, that is. Farfetch, of course, reported after the bell last night, the online retailer reporting a smaller loss than expected. So it's up nearly 30%. You also have a big 16% move or so to the upside for Block, the former Square, which gave a rosy outlook for the rest of the year, thanks in part to the integration of its acquisition of Afterpay. One stock to the downside, though, Zscaler. This is a security software company. It is sinking after reporting its results, down more than 13% before the bell, Anna.
Kailey, let's have a quick check on the European markets then. And we are seeing European equity markets bouncing quite substantially this morning, not making up for the losses of yesterday, but certainly bouncing, reflecting really what we saw late in the day in the United States on Wall Street in yesterday's session. So the sanctions, not including energy and not including the SWIFT system, that gives markets a little room, risk assets a little room to rally in the short term, up by 1.7% on European stocks. Where does the FTSE stand in all of that? We didn't see it sell off as much as the rest yesterday. The bounce quite good today, up by 2%. I pulled out the FTSE because we saw Goldman Sachs increasing their 12-month expectation for where the FTSE closes and decreasing their Stock 600 call. So pivoting a little more towards the UK market, or at least the UK benchmark, not necessarily the UK economy, but given the weighting towards banks and also obviously energy. Talking of energy, 99.24 is the Brent price, so just below that $100 a barrel. We, of course, are not sanctioned. There's no sanctions on energy products at this point. We've heard from the United States about releasing from their strategic reserves, and we wait to to hear what OPEC has to say. OPEC meets next week. Natural gas, this clearly good news for Mario Draghi, the Prime Minister over in Italy, talking about the pain that could be inflicted on Italian consumers when it comes to the cost of energy. But up yesterday some 30% at this time of the day, down by nearly 20% in today's session. Incredible volatility on these wholesale prices. Of course, the consumer not necessarily feeling the wholesale price, Kailey, but clearly the inflation impact of all of this is pretty evident.
Well, and it's not just incredible volatility in natural gas. It is incredible volatility across asset classes, Anna, as the conflict in Ukraine just continues to muddy the outlook for markets. Here's some of our reaction from guests.
What we've seen in this escalation is just a rise in uncertainty, and that means a rise in risk premia.
If a full-scale war breaks out, there would be a big shock. It would likely have a big impact on inflation.
Now we have this invasion. That's not going to help consumer confidence.
The markets are now really pricing quite a big slowdown, and positioning has become quite negative.
And these one-off upward price pressures really add to the risk of inflation expectations getting away.
I think China is going to be a safe haven.
I'm not sure this completely takes the Fed off the table.
Barring an unexpected turn in the economy, I believe it will be appropriate to move the funds rate up in March.
It's timely for us to normalize policy.
A strong case can be made for a 50 basis point hike in March.
Policy is really poised to return to a more normalized stance.
We're going to have to see whether this Ukrainian situation changes that narrative. And I just think time will tell.
The cumulative amount of rate hikes in this cycle should and will be, in our view, a lot more muted.
They're going to throw the ball straight down the middle and try to avoid surprises.
Joining us now is Peter Garnry, head of equity strategy at Saxo Bank. Peter, I want to come back to something Anna mentioned, which is Goldman Sachs downgrading their targets for European stocks. Sharon Bell and the team writing in a note, in light of the conflict, the rise in risk aversion, some of which will likely linger, and the impact on the growth and inflation mix, we take down our target prices. Peter, has the conflict in Ukraine changed your outlook on Europe?
We already had a defensive stance on equities, and we have had a Q4 earnings season showing that we have had now 2 straight quarters of margin pressure at companies. So the operational environment for companies is very difficult and challenging because of the inflationary pressures. And we agree with the assessment from Goldman that the current situation and the events unfolding in Ukraine is adding fire to that and more headwinds for companies. And I think if you watch through the earnings season and the price action lately, you can clearly see, and it makes sense, that the market is not favoring growth any longer, revenue growth. That's not the key point here. The key point is your operating margin. When you have the current equity valuation you have and the current outlook, a 1 percentage point lower expectation for operating margins over a 5-year period has a much more negative impact on equity valuations than you beating revenue estimates a little bit. So that's the key watch. And you saw that with Block overnight. They were up 30% in Sydney trading because they beat on operating margin and their outlook. And that's the key thing. And you have a lot of companies that don't have the pricing power. They can move on. They cannot, pass on all their cost to their customers and consumers. So this is really critical. And that's why companies with pricing power in this environment will do well, but also energy and mining companies, because it's really the physical world, the supply side of our economy that is really giving the shocks to companies right now.
Yeah. Peter, and what would the sensible course of action be for the ECB with that in mind? We heard from Robert Holtzman and some other commentary, and some market assumptions seem to be pushing out when we get that policy normalization from the ECB. But at the same time, we saw French inflation data really coming in well above targets today, or well above estimates, sorry. And that only reminds us of the inflation that is already baked in, and yet we probably have more of it to come.
Exactly. I think the central banks are increasingly in a very tough position because they need to battle inflation. We know the inflation is coming from the supply side. So what you could do is raising rates, and that will choke off or kill a little bit of the demand, cooling prices. But then on top of this, you have demand destruction already coming from inflation. It's pressuring households and companies already, and it will be more so in Europe versus the US. The US is in a much better energy situation. And then you have that situation that if central banks don't get it right and they tighten financial conditions and monetary conditions too much, despite they probably have to do it because of the inflationary pressures, then we go into a mild recession. And then the worry for me is that we haven't solved the structural issues on the supply side of our economy. We're simply not investing enough in oil and gas and other critical natural resources. The investments are too low. And then you get a fiscal response, and then just like in the 1970s, bam, we're back into slamming into the inflation barrier because we are limited on the physical side of our economy.
Is that stagflation then, Peter? And there are shades of stagflation because you can define it differently. But how would you characterize what we're heading into?
Yeah, I would call it stagflation, but in a light version. I don't think we'll go back to the 1970s. There will be a lot of similarities, policy mistakes, subsidies from politicians. There is no easy fix to this, but I would call it stagflation light. We have a much more fragmented and distributed global economy. Companies operate with much better information systems and planning tools than we had in the 70s. So I think it's a little bit of a different situation, but definitely there are threats back to the 1970s. And that, if you look through that period, was not a very good period for equities in real terms. You had a negative period in terms of real equity returns from 1968 to 1982 in the US. So I think this is really a time to rethink your paradigms and your views on equities. I really think that we are witnessing, or we are in the middle of a regime shift here.
What would you, do you look back then at the playbook from the 70s and try and take a few pages out of that? And what would they be?
Yeah, so this is the tricky part. The economy are constantly changing. You can draw parallels, but you have to be quite difficult because we also have a digital economy. Things work differently than it did in the 1970s. But the playbook, as far as we see it, is you go for companies with pricing power. That's the Warren Buffett method, right? You need to get exposure to mining companies, energy companies has proven to be this week your natural hedge. We like cybersecurity because of all the reasons that we're seeing in Ukraine and Russia these days, and cybersecurity has become a necessity. So we like that. Logistics, to some extent, also semiconductors. Those are some of the areas where you need to increase your exposure. And then, from a asset allocation perspective, you need to also think about gold. You have to be at the short end of the yield curve, etc. But I think that goes without saying almost.
Peter, thank you so much for your time. Peter Garnry, Head of Equity Strategy at Saxo Bank. Coming up on this programme, we'll be discussing the international response with Fabrice Pothier, a defence policy expert who's advised two successive NATO Secretaries General, Anders Fogh Rasmussen and Jens Stoltenberg. We'll get to that conversation shortly. This is Bloomberg.
We are not going to harm the world economy system we are a part of as long as we are a part of it. I believe our partners have to understand it and not aim to push us out of the system.
That was Russian President Vladimir Putin talking earlier. Now, joining us is Fabrice Pothier, Chief Strategy Officer at Rasmussen Global. Fabrice served as Head of Policy Planning for two successive NATO Secretaries General. Fabrice, great to have your expertise then with us on the programme. We just heard there from Vladimir Putin. How far do his ambitions go here, do you think?
I think his ambition goes all the way to Kiev politically, meaning that he wants to really put Ukraine down and make sure Ukraine can kind of operate on his terms. So that implies no NATO membership, no EU membership, but also a Ukrainian foreign policy and even domestic policy that would be aligned with Moscow. So which is basically what he's been doing in Belarus, in Kazakhstan. So he's trying to recreate the Soviet empire.
Would an offer of neutrality from Ukraine, we heard Vladimir Zelensky earlier say that Ukraine isn't afraid to talk about neutrality. Would that be a way to get out of this military conflict?
I honestly don't know, because we have always been thinking, oh, we need to give Vladimir Putin just a bit and meet his demands, so somehow he will not attack us or attack Ukraine or Georgia. And every time we've done that, he actually did attack Georgia, Ukraine, or other places.
Right.
In the world. So I think there's go ahead.
Well, you know what? The bottom line, and I've been wondering this already for months, if not years, why is it not morally reprehensible to buy Russian oil, gas, and aluminum? President Biden talks about keeping prices down at the pump, but there are people being killed and homes being destroyed in Ukraine. If there were a restaurant chain that was flagrantly discriminating against a protected group, we wouldn't go eat dinner there, even if it was the only restaurant. So why is it okay for the EU to say, leave them in SWIFT, we're going to keep buying their gas? Why is Italy just now firing up coal plants and ordering LNG from the U.S.?
It's not okay. It's not okay from a moral point of view, and I think the U.S. is also buying Russian oil. And it's not okay from a strategic point of view, because the fact that Germany, for example, has had a huge multi-billion-dollar gas contract via Nord Stream 2 with Russia going on for years, has basically constantly weakened our strategy to contain and deter Vladimir Putin. So it's not okay, you're right. And I think hopefully some good can come out of this crisis, where the West will finally be honest with itself, sever the links it should sever, to really contain the problem, because we only have done it halfway. And Putin knows that and has been using that.
Well, Fabrice, on your point about halfway, and we heard this from Vladimir Zelensky in his overnight address as well, that sanctions have not convinced Russia. If sanctions aren't going to work, what, if anything, can the West do that will?
Well, we are in the sanctions sequence now, military sequence. So the question to the West, which is really difficult, is whether we are willing to be part of a military pushback. That does not have to be US or French or Spanish soldiers on Ukrainian soil, but it can be something broader, like maritime blockade in the Baltic and Black Seas, like cyber attacks, but at least some response that is coming to basically to help and watch Ukraine's back. For the moment, we're just sitting, claiming sanctions, making big statements, but we are not basically letting Putin lose his strategic advantage.
Does the West then risk allowing itself to walk into what's going to become a new world order if Putin's ultimate aim is a return to the Soviet Union?
Well, it's a new European order. That's pretty clear. And you are going to increasingly have two Europes, one free and open, the European Union, and the rest that is going to be under the Russian rule. And this is what we wanted to avoid, but we have never gone all the way to basically offering Ukraine, but also other countries, membership of the European Union and NATO. And Putin has been using that. Now he's gone all the way to basically put them under his boots.
Fabrice, is there a threat, any threat to NATO here? Using your experience of serving under two Secretaries General of NATO and working for them, advising them, is there a threat to NATO here? I mean, Ukraine, starkly, and the Ukrainians might feel disappointed about this, is not a NATO country. Other countries in Eastern Europe are, and that is different, and we heard that from the President of the United States yesterday. What should be the impact on NATO here?
The threat is still very remote to the Baltic states or Poland or Romania, but it's probably higher than it was a couple of days ago. And I think we have to be clear about that. And this is why NATO is going to amplify its territorial presence and defense on the NATO eastern flank. But frankly, I think the real threat is that if Ukraine goes down, it's going to have a major impact on stability in Europe. You are going to have refugee flows coming from Ukraine to Western Europe. So we should not keep ourselves in thinking Ukraine somehow can be kept at arm's length from the rest of Europe. Ukraine is part of Europe, and what happens there is going to impact us all. Even if we have US, German, French soldiers on the NATO border, it's not going to be enough to contain the Ukraine problem. So that's why we need to get there.
Fabrice, thank you very much. Fabrice Pothier, Chief Strategy Officer at Rasmussen Global. Thank you for your perspective. And we will be talking further about the possibility of those refugee flows in the next part of our program. Coming up, though, on Balance of Power later, US Deputy National Security Advisor Dalip Singh. That's at 12:30 p.m. in New York, 5:30 p.m. in London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kailey Leinz in New York. Anna Edwards with us out of London. Now, Europe is bracing for what could be an exodus of more than 1 million refugees after Russia launched a full-scale attack on Ukraine. Joining us now to discuss is Patrick Donahue, Bloomberg European Government Editor in Berlin, and focused really on Eastern European economies. Patrick, what does this mean for Europe, considering the fact that the continent in some ways is still reeling from refugees that came from Syria.
Well, reeling, it depends on who you talk to. I think the continent, I mean, the European Union with a population of whatever is 500 million, is certainly able to absorb a large number of refugees. That was also proven in the 2015-2016 refugee crisis. It was primarily a crisis for Germany, where most of the migrants ended up, but it was a question of who wanted to take in migrants. And of course, back then, Eastern Europe almost steadfastly refused to take in migrants. And now you have another story, because if there's a refugee crisis on the back of a war in Ukraine, you're going to have more than a million refugees coming in, according to forecasts from European officials, different EU member states. And so you'll have a different picture for Eastern Europe.
Yeah, I didn't mean reeling necessarily economically. The last wave of refugees was absorbed well, but politically it was difficult for the last administration in Berlin, certainly, and for especially the peripheral countries, Italy and Greece. Are they willing to accept refugees this time?
You hear a different tune, yeah, from these Eastern European governments. This morning, Viktor Orban, the Hungarian prime minister, who's been a strident anti-immigration leader, he's made a name out of it, and he's heading into a difficult re-election in less than 6 weeks. He's exempted Ukrainian citizens from Hungary's fairly draconian asylum rules. I mean, rules that have been ruled illegal by the EU's top court. That kind of gives you an indication. Of course, Orban refused to accept mostly Muslim migrants 6 years ago during that crisis. And this time it's different when you're talking about Ukrainians.
Right, and what kind of reception then, if Ukrainians are on their way towards the European Union, Patrick, what kind of reception would they get, say, if they go towards the Polish border, which might be in their sights? And how quickly does this start to test the unity of the EU?
Yeah, well, I mean, the main picture for Ukrainian migrants coming out of war, basically, is a fleeing war, is that in the EU you have 4 border states to Ukraine. Most of refugees will probably go to Poland, where you have already have a population of Ukrainians that's numbering between 1 and 2 million in Poland. They make up a large portion of the workforce there, and so the Polish government has been clear that they will accept migrants. So far, it's been a trickle comparatively. It's very early, but those numbers could grow depending on the level of violence.
They could grow. Patrick, thank you very much. Patrick Donoghue with that important story from Berlin. More Bloomberg Surveillance is ahead. This is Bloomberg.